Heather, I don't know, I'm sure you've seen it. University of Pennsylvania, Wharton School, doing a measure of this Inflation Reduction Act, says actually it's not much of a reduction act at all. In fact, it may increase inflation marginally.
Well, you know, economists have various models. You know, one of the things that we see is that they do not say that it's going to increase inflation. There's also new data coming out from Moody's.com this morning from Mark Zandi, where he's already indicated that his model actually does show that it will lean into inflation reduction. And here's the thing. Core parts of this legislation are going to give significant relief to families by continuing to extend the subsidies to health care through the Affordable Care Act. That will certainly help families that are struggling with costs. Giving the government the ability to negotiate over prescription drugs, that's going to help families with costs. And, of course, all of the energy investments that are going to provide rebates to families who are looking to make that transition to clean energy. This legislation is going to lower those energy costs over time, make them less volatile. So it's difficult to imagine that this bill does not significantly support family economic security and help families cope with the high costs of living.
The Joint Committee on Taxation looked at the bill. The average tax rates will increase for nearly every income category in 2023 under the bill.
So that estimate, there are two challenges with that number. First, that estimate doesn't take into account any of the direct tax credits or rebates that families receive. So they excluded them. That's in the fine print at the bottom. So the energy tax credits, the Affordable Care Act, reimbursement, supporting families to get health care, all of that is not counted in that estimate. And further, it doesn't take into account the lower costs over time through negotiating over prescription drugs or energy prices. So those are some important things. The other thing is that is, too, it's based on a model that assumes that any time a company invests, that will lead to higher wages. And so if taxes lead to less investment, then that'll mean that wages come down. But that is not what we saw with the 2017 Tax Cuts and Jobs Act. We've already had recent evidence that even when you lower taxes, it does not lead to investment and does not lead to the kinds of wage gains families need to see. This legislation is going to invest in America. It, combined with other legislation the president has worked for, including the CHIPS and Science Act and the Bipartisan Infrastructure Law, these are all going to increase productivity all across these United States and create good jobs.
Most people think that it is throwing more fire onto the demand side of things and sort of counterproductive for what the Fed's trying to do. And you've got basically half of the 15% minimum tax really is going to hit manufacturers. That's the one area where, high-paying jobs, we want to make things in the United States. 50% of the tax would hit U.S. manufacturers, again, according to the Congress Joint Tax Committee. But it just doesn't seem like the time to be doing that. Are we in a recession? Are we not in a recession? This seems like I know President Biden needs a win, and Manchin's been, we didn't get to do the $5 trillion that Bernie wanted, but I don't know. Have you heard anything from Kirsten Sinema about her? What she's thinking on this, Heather? Do you know?
Here's the thing. What I'm focused on is how are we going to grow and build America's middle class? How are we going to create good jobs all across this country? And how are we going to do that through investing in the kinds of industries that are going to support innovation and investment? And that is what we see combined with this, the Inflation Reduction Act, and the CHIPS and Science Act. I mean, already we've seen announcements of over $100 billion in semiconductors recently, as well as over $100 billion in new electric vehicles and batteries. This legislation is designed, those two pieces of legislation are designed to foster that kind of innovation and investment that's going to create good jobs, and that's going to benefit American workers. Not all this money is going out immediately. There's not an indication that it will be inflationary in the short term. And again, there's lots of pieces that are going to help families cope with high costs. And let's remember that the Inflation Reduction Acts will be deficit reducing. So when you look at the macroeconomy, the one thing that people say time and time again is that if you don't want to, add more fuel to the fire, let's make this at least deficit neutral, if not deficit reduction. And that's what the president has done, along with a record-breaking $1.7 trillion decline in deficits over the year.